Okay, so let's have a look at Mike McNamara, the 2014 Sole Trader question 1. So remember, this here is your trial balance. On the debit side, we've got our expenses and assets, and on the credit side, we've got our income and liabilities. And remember, your expense and income go into your profit and loss account, your assets and liabilities then go into your balance sheet. So if you look at the first adjustment here, it said stock on the 31st of the 12th, 2013 at cost was 80,000. So at the end of the year, we had closing stock of 80,000. But no record has been made for goods in transit on the 31st of 12th, 2013. The invoice for these goods have been received showing the recommended retail selling price of 4,800, which is cost plus 20%. So the first thing we have to know that if we've got goods in transit, that means that goods are on the way to our business and they haven't been recorded in the books. So if these goods are on the way to our business, that means our closing stock needs to be adjusted. It means our purchases needs to be adjusted because we bought the goods. And in a business, when we're buying goods, you're buying them on credit, so your creditors needs to be adjusted as well. So we're going to have more in our closing stock because it's extra stock that we bought. We're going to have more in our purchases because we bought extra purchases. And we're going to have more in our creditors because we're going to owe more money. That's the first thing. So goods in transit, it's going to be your closing stock, your purchases, and your creditors. And then because this is a recommended retail selling price, that means that we're going to sell them at 4,800. But we need to find out what that cost was to us. So what's the cost to the business? Because that's how much we're buying it for. We're not buying it for 4,800. We're selling them at 4,800. So this 4,800 is 120%. So we need to find out what is the 100%. And the 100% is the figure that we're going to adjust our closing stock, our purchases, and our creditors by. So our adjustment is going to look something like this. So we're going to have three workings, working one for closing stock, second one for purchases, second one for your creditors. We need to know for goods in transit, so I suggest that you put goods in transit on a post-it and stick it up somewhere in your room or write it somewhere because this adjustment will come up in other questions. And the three accounts we need to increase our cost, our closing stock, we need to increase our purchases, and then we need to increase our creditors. But first of all, we need to find out what is the cost. So 120% is equal to 4,800. 1% is equal to 4,800. Divide that by 120. So 4,800 divided by 120 gives you 40. So 100% then is going to be equal to 40 multiplied by 100. So 4,000 is how much you need to adjust our figures by. So the amount for our closing stock from the question is 8,000 or 80,000. We need to increase that by goods in transit, which is 4,000. So our new closing stock figure is going to be 84,000. And that will go into our balance sheet as a current asset, and it'll also go into our profit and loss in your trading account. So we should have a good idea of what our two accounts are. Your next one is your purchases. So you need to go back to the question to find out how much our purchases are. So our purchases, now remember, purchases are an expense, so they're going to be on the debit side. Income is a sale, so it's going to be on the credit side. So 5,300, so 130,400. So, or your sales are always going to be higher than your purchases. So our amount is 530,400, and then we're going to increase that then by our goods in transit. And that's going to give our new purchase figure. I know that's going to go into our profit and loss as a trading account, but I know in the question, there's a next one is going to be our depreciation, and usually we need to adjust our purchases, so that's not going to be our final figure. And then our creditors then, so you need to go and look for a creditors figure in the question. So the debtors is on the debit side, creditors on the credit side, so creditors are 110,000, so that's how much we owe. So we bought more goods in transit, that cost us 4,000. So we need to adjust them. So that's going to be a new creditors figure. And that should go into our balance sheet as a current liability. So that's your adjustment for the first one, for goods in transit. So remember, two things that you need to know for goods in transit. One, you need to know the three accounts that are going to be adjusted: your closing stock, your purchase, and your creditors. Closing stock is going to increase because we've bought extra goods. Your purchase are going to increase because we bought extra goods. And because we bought extra goods, our creditors are also going to increase because we owe them money. We need to find out what is the cost. So remember, the figure in the question is a selling price. That's not what we bought them at. So we're always, in a business, you're always going to buy it at a lower price and sell it at a higher price. So you need to find out what your cost is. So this 4,800 is 120%. So we find 1% and then we multiply that by 100% to find out what your cost is. And that's how you do the first working for Mike Monaghan, I think it is it? For Mike McMahon.